Okay, welcome back to another episode. Hope you are so far enjoying this. I've got a bit of a cranky voice today, so do bear with me. Okay, so let's jump straight into this and let's have a look at the signals for today. So we had one signal today, and if you have a look here on X or Twitter, this I keep calling it Twitter, so do excuse me. If you have a look here, I posted it on X, and you can see here at 1:41 p.m. UK time on March the 14th. This is the only signal we had. As you can see here, we were looking to short the market. Okay, so let's flip over to TradingView and let's have a look at TradingView. Okay, so here in TradingView, let's have a look at the opportunities we had today. So, we had three opportunities today. So the market was pretty much short all day today from, like I say, my signals that I get from my custom indicator that I have an MT4. So if we look at the first opportunity here, just after I posted, just before the US Open, and, that's where I keep saying that's where the volatility could come into play here as well. And this is where it's played out absolutely nicely. So as you can see here, our risk to reward again, it's about, it came up to 9. I mean, that's, I don't think anybody could time the bottom of the market. It's absolutely impossible. But even on a short-term time frame, what I mean here on the minute chart that we're trading at, my aim is always, to go from, at least 1 to 4 or 1 to 5, right? Risk reward. I keep batting on about that, So 1 to 4, even if you widen your entry, that stops slightly, it's easily achievable. So, I'd class this definitely, if you took 1 to 4 or 1 to 5, I'd class this as a winning trade. I'd gone for the 5 because the reason why is once it breaks that low at the US, towards the US Open, it's likelihood that you're going to get a bit of momentum. You could get a bit of whipsaw, but like I say, it's played well into our hands here, and it was a short, and that's what we looked at, and that's exactly how it's played out. So that's the first trade that we had here, and let's have a look at the second trade. Okay, so let's have a look at this second area here. Area?
Gay!
Area. Yeah. As you can see, as the we get this pullback, right? So from this first trade, we get this momentum downwards, and then we get a little bit of pullback, and then we get this momentum to continue make a little bit of another low, and then we get this big swing back up on the minute chart, and then a bit of pullback to the 20 MA again, and then a swing back up. But as you can see, that swing is coming into a resistant area here as well. So you don't have to take the first entry. Potentially you could, it's a nice risk to reward. This has turned out again, but you've got plenty of opportunities again if you look further to the right of the first entry that I've sort of highlighted. There's a couple of opportunities to re-enter, so if you miss that. But again, the other piece is also, I say, is, you could widen your stop here slightly, right? So we've got 14, risk to reward was what, 7, again, I'm not going to claim to get down right here up to this, up to the lows, towards the end of this green highlighted area that I'm going to, that we're going to get out at the lows. Is, I say it's impossible, but if you widen the area, 1 to 2, 1 to 3 achievable. 1 to 4 achievable, 1 to 5 also. I think this is very achievable. So the key is also keeping these stops sort of tightish. So it gives you that maximum opportunity in the sense of ensuring that we can keep that squeezed as possible, so we can get these higher risk to reward ratios, up to the 4s and 5s, and and if you want to get it to the 6 and further up, it's just how you are going to manage your trading itself, but I'm looking to give you the entry signals into the direction that we expect the market to continue over this short-term period. Okay, so let's flip over to the third entry. Okay, so here again, it's coming up back, up to that resistance area again, right? So it's more being visual about, what's going on in the market, and, not just entering nilly-willy. But as you can see, it's coming back up to that resistant area again. and again, it's a good opportunity to re-enter the trade again. So again, this one played out a lot better. Yeah. So again, risk reward, stop. We're looking at about 15. You can widen that if you want a little bit, your entry and widen the stop a little bit more. And we've got 15 here, and then your risk reward again, and then it's about managing the trade, right? So here it's come up to 9. So again, if your target is about 3, 4, 5, I keep saying 4, 5. Again, even with a widened stop here, that's absolutely perfect for me. And these 4 to 5s are absolutely winners. So if you'd have taken those 4 trades, at 5%, or if you're at 2%, let's just say you're at 1% risk per trade, then you're up 15%. Not exactly, but nominal value, yeah, in terms of each winning trade in total. Not we're looking at nominal values here, so you'd be up 15%. Well, there we go. That's what we have for today. Quick, short summary of the trades. Hope you've enjoyed it, and I'll see you next time. Take care. Bye.